Hello, this is the ChoWorld team. Amid the escalating trade war initiated by President Trump, the index is falling significantly despite a stronger-than-expected credit employment report released this morning. And all of this is linked to China's retaliatory measures. Beijing announced that it will impose a new 34% tariff on American products in response to the White House's comprehensive tariffs. This morning's employment report showed better results than expected, but it only slightly eased the start on Wall Street. However, if you look at the stock market now, stocks are plummeting as investors have priced in the worst-case scenario of an escalated trade war. They expect the government to be willing to negotiate with other countries. However, that is not the case. Investors say that confidence has completely collapsed due to the escalation of this trade war. The better-than-expected numbers from the employment report were a ray of hope. In March, job hires increased by 228,000, which is about 100,000 more than expected. The unemployment rate slightly rose from 4.1% to 4.2%. However, investors say that this news now feels like a thing of the past. While everything began to change in March, it truly started when President Trump announced comprehensive tariffs on April 2nd, and Wall Street was waiting for retaliatory measures from major trading partners. And this morning, China announced that it will impose a 34% tariff on all American products. This corresponds to goods worth approximately $143 billion annually. This includes chemicals, computers, agricultural products, and so on. These goods were already subject to tariffs during President Trump's first term in 2018, and retaliatory tariffs were also implemented in March. As the trade war escalates in this way, transportation, oil and gas exported from the United States will also be affected. However, the important point is that the value of goods that the United States imports from China is much larger. The U.S. imports goods worth approximately $438 billion annually, and these goods are subject to the 34% tariff imposed by President Trump. Economists also agree that these price increases will eventually be passed on to American consumers. Speaking about the market situation, President Donald Trump publicly criticized China on social media, claiming they made a mistake, and said that there is a state of panic over the tariffs. However, all of these situations have become clearly evident in stock markets around the world following China's announcement. The message conveyed by the American president reveals a significant amount of arrogance. Observing global markets, one wonders how far this cycle of tariff and tariff retaliation will extend. Assessing the current situation, the Dow Jones Index fell by about 100 points today and by 1,600 points yesterday. Stocks of companies such as Apple, Qualcomm, Tesla, and Caterpillar have dropped significantly because these companies are heavily exposed to China. As a result, major American companies are suffering considerable distress. Of course, this situation also affects the portfolios of various investors and consumers, that is, the general public, in the United States. A significant drop is also observed in Europe. Although there has been no retaliation from Europe yet, retaliatory measures from other countries are expected next week after this incident is resolved. For example, the German DAX index fell by about 4%, and the FTSE index is showing a similar decline around the 5100 level. In Asia, there was also a significant drop, marking yet another day of extreme downturn. At this point, many are wondering when the stock market crash will occur and how close we are. Fortunately, it has not yet reached crash levels, and according to CNN, the decline has already been reflected in stock prices. In some markets, such as Italy's FTSE MIB, there was a drop of more than 5%, yet it still has not reached a crash. It is also important to consider that over the past few weeks and months, not only today and yesterday, but billions of dollars have disappeared from the stock market as uncertainty and tariff threats have accumulated. Today, Deutsche Bank reported that the market is pricing in a global economic downturn. If this situation persists and more retaliatory measures are taken, the United States might move in that direction. So, is there absolutely no way to avoid this state? Corruption has already taken hold. Could negotiations or a retreat by the United States reverse the market? CNN analyst Lana Foruhar in New York and economics professor Hagen Chang in London say the following. There are two perspectives on this issue. The first, frankly the most frightening, is that he is merely speaking off the cuff. There is no overarching global strategy here at all. This is exactly the problem of Donald Trump and his arrogance. And one strong assertion is that on the premise that there will be no coup in the United States, he has no chance of being re-elected. Therefore, this time we can be less concerned about the global market and the US stock market than before. This might be a matter of power and arrogance. On the other hand, the second perspective is that many of him and his team believe that the global trading system needs to be overhauled for a long time. He wants the gap between the tariffs imposed by the United States on other countries and those imposed on the United States to be reduced. However, right now we are in a state of full-blown trade war where everything is in disarray. It does not seem that these figures will persist. I believe that behind the scenes, a wave of negotiations and essentially a talk deal is already taking place. But what I can say is that since trust has completely broken down, the possibility of an economic downturn is very high, and we have entered an unprecedented realm. This could be the biggest change in the global economic system that we have seen in the past half-century. As Lana mentioned, even if the market recovers slightly, the negotiation movements will continue. In response to the question, how irrecoverable is the damage inflicted on the global economy, the answer was affirmative. And over the past few days, I have been pondering whether there is any solution amidst this chaos, but I concluded that it is merely wishful thinking. President Trump believes that imposing tariffs will cause all foreign companies to rush into investments, yet the industrial base of the United States has been in decline for the past 40 years and cannot be rebuilt within a few years. Moreover, even if they invest on a large scale, by that time the tariffs will be lifted, creating a situation where you can't have your cake and eat it too. American companies also lack the capacity to make large-scale investments. For decades, the US financial system has operated like a parasite, siphoning profits from companies. Over the past 25 years, 90 to 95% of corporate profits have been returned to shareholders in the form of excessive dividends and share buybacks. Consequently, American companies are short of funds for investments. If no measures are taken regarding the financial system, all additional profits generated by tariffs will simply flow out of the system. Thus, ultimately, it is all based on wishful thinking, and the most critical point is that over the past few days, the United States has essentially abandoned its status as a nation governed by the rule of law. It is reported that my home country, Korea, signed a free trade agreement with the United States 15 to 20 years ago, but is now subject to a 25% tariff. So regarding the question of who would take America's promises seriously, it can be said that the global order is being reshaped in many ways. In other words, the upcoming reorganization among global trade blocs could be extensive, and while this situation might present an opportunity for China, it could also work against China. It is said that we should watch with great interest how Xi Jinping and Beijing handle this situation. However, there is some skepticism about whether a completely new alliance will be formed between China and Europe. This is because, with cheap Chinese goods no longer able to flow into the United States, they will instead flood into Europe. But would Europeans like that? They probably wouldn't. As a result, we get the impression of a chain reaction of, oh, we're really in a global trade war. If China were to suddenly declare, we will now allow dumping of cheap steel, electric vehicles, and solar panels, then a completely new and more productive paradigm could be established with Europe. In that case, one might conclude that President Donald Trump may have made Europe great again,